Let me start by saying something you don't hear enough in business conversations. I don't know your business as well as you do. Well, nobody does. And most of what passes for advice from the outside tends to assume otherwise. So rather than tell you what to fix, I want to share 3 patterns that show up in nearly every well-run organization we work with. These are not signs of problems. They're the natural result of being focused on running the business rather than constantly re-examining what seems to be working just fine. I'm Joseph Carpenter, National Practice Partner at Era Group. I also serve on the board of one of the largest federally chartered credit unions in the United States. And I served 3 terms as mayor of Bernards Township, New Jersey, my hometown, where we eliminated all municipal debt while keeping taxes the lowest in New Jersey. These experiences have taught me the same lesson from 3 different angles. The money to fund what matters next is almost always already within the organization. Now, I can't tell you where your specific savings are. I've never seen your books. Anyone who claims to diagnose your business from the outside is not being straight with you. But I can share 3 patterns that show up in nearly every organization that we work with. And the first pattern is that vendor relationships age in silence. You signed a good deal 3 years ago, but since then the market has moved, your volume has changed, and nobody revisits the terms because the service just works. This isn't negligence. It's just having 100 other priorities. A structured review surfaces savings in roughly 80% of engagements. The second pattern is the untouchable budget line. Every organization has categories that get renewed on autopilot. The utilities, insurance, logistics, telecom, they feel much too complex or too stable to question. We've seen companies unlock real cash flow simply by bringing current market data to the categories everyone assumed were fixed. And the third pattern is that savings without a destination, they disappear. Finding inefficiency only matters if you connect recovered capital to what comes next, whether that's growth and expansion or R&D, hiring and talent, or competitive positioning. Otherwise, it just gets absorbed back into the budget. Cost optimization is not about shrinking your operation, it's about funding the next chapter. Well, one thing I want to be upfront about, we're not the right fit for everyone at Era Group. If your contracts were all renegotiated last quarter and you've got deep procurement expertise in-house, we might not add much. But if any of this sounds familiar or you're curious, a conversation might be worth a few minutes of your time. Just a conversation to see whether there's something worth exploring together. If you'd like to take me up on that offer, you can reach me at jcarpenter@eragroup.com. And I'm Joseph Carpenter on LinkedIn. Wishing you all the best.